Andrew says, "Hi, Austin and Robert. I'm a massive fan of the show, and I've been here since episode 1 over 2 years ago." Let's go, Andrew. Wow, man. Thanks so much for listening for such a long period of time. We are just so humbled whenever people are like, "Yeah, man, I've been here since day one. 2 years in the making." It's just so cool to read that. So thank you, Andrew. Andrew says, "You guys have helped me build my base to over $100,000, and it's invested into the ETFs we love and know. But now that I have my base built, I'm looking to allocate a small amount of my net worth, about 5 to 10%, to be more aggressive with my investments." I loved the episode with Chris Camillo, as it sounds like everyone else did as well. I particularly love the idea of having that high risk investment bucket. I wanted to get your thoughts on what exactly this could look like. He mentioned Nvidia, Amazon, and Tesla as high growth for humanoid robotics over the next 10 years. However, that doesn't feel like high risk as he was describing it, as VOO and QQQ have a lot of those shares already. So my question is, what would you guys do in your high risk bucket? Is this utilizing options? Is it leveraged ETFs to capture more upside in these names? Is it Bitcoin? Is it all the above? For background, I'm 26, make 100K a year, have 110 grand between my 401k and my Roth IRA, 35,000 in a high yield savings account for my emergency fund, and I'm starting to save for a house down payment. I want to allocate $100 to $300 a month to this high risk bucket. I have an investment horizon of 35 plus years. What a good, fun question. Yeah, you guys love that episode with Chris. Oh my gosh. I'm just going to look it up real quick. You guys shared 30, 40 comments on that episode. And some of those comments, just to like call them out here, great content, guys. This is the greatest episode I've ever listened to. Love this podcast in space. Excellent episode. Great episode. Great episode. Like, incredible episode. You guys were just all about it. So we are super happy to be bringing you fun people that we've been connected with for a long time and give them the spotlight they deserve. And hopefully you guys learned something along the way, which it seems like you certainly did in this episode. So Robert, I'll kick this one off. Andrew, shout out to you for having a wonderful base built. You make great money. You have $100,000 plus invested. You've got a great emergency fund. And it seems like you want to start allocating a couple $100 a month to a high risk bucket. In your situation, it seems like you are saying, hey, I already have exposure to these names, and so I want to do even more. How do I get even more exposure? How do I have even more, risk that comes with this? Two ways. One, you can invest in privately held companies, which we do pretty much every month inside the Rich Habits Network. Go join if you want to invest. We've offered 2 humanoid robotic investments so far, which I think we raised over like 1.9, just about $2 million of investments from Rich Habits podcast listeners into those companies through the Rich Habits Network. So like, what are you waiting on? Go join that, Andrew. And then the second thing I'd encourage you to think about is, again here, Chris Camillo has made millions and lost millions, right? So it obviously he's made more millions than he's lost, which is why he has $60 million, but he's had bad trades along the way. But he's done that by leveraging options, which is a way to bet on a stock price on a specific date. So essentially with an option contract, if it's a call option or a put option, you're either bullish or bearish. And with that, you are betting that the price of the stock will hit a specific number by a specific date. Chris does that with earnings. He does that with other, sort of specific events that are pertinent to stock price movement. And by doing that, he is able to make a bet that if it is above that specific number, he'll make a lot of money. And if it's below that specific number, he'll lose his entire bet, right? So you are either all in and you make a bunch of money, or you're all out and you lose it all, right? I mean, it's very, very risky stuff. It is not investing, it is gambling. It really is gambling here. So if you want to do that with your high risk bucket, maybe learn more about calls and puts, but I would not want to go into like margin or anything. Chris does use margin, but he's got like special relationships with like Schwab and these people that give him good rates because he's got $60 million. So it's a little bit different, but I wouldn't use margin. I wouldn't go into debt. But if you did want to say, hey, I want to like try to do this stuff and you want to put $200 on a call option on SoFi stock, or $200 on a call option with, I don't know, Ford or something on an earnings, and it hits and your 200 turns into 800, like, congrats, you just gambled and you won your gamble. Or it doesn't hit, congrats, you just gambled and you lost. Like, that's just what happens.
And for everyone listening, we really appreciate that you love that episode with Chris, but let me make something very clear. Having a high risk bucket is important in my opinion as well. but it doesn't mean that it has to be highly complicated. I think a lot of you correlate that high risk is high complication. Doesn't have to be. You don't have to do all of these crazy strategies. The way I would look at it, especially in your first few years of investing like this, is you're going to look at it that you're going to earmark this amount of money every single month to invest in a higher risk sector or sectors. So it could be anything from precious metals to a cryptocurrency sector, or it could be these pre-IPO private placement companies that we invest in every single month. So just keep that in mind, that high risk does not have to be highly crazy, like complicated to be able to do. It's just a matter of pivoting away from some of the safer stuff and putting a higher percentage, that 3 to 5% of your net investable capital, into this higher risk bucket. So I hope that clarifies to a lot of you, because I don't even do the crazy strategies very often. Most of my stuff is set it and forget it and keep going, even if it's in the high risk sectors.
Yeah, let me be super clear. I am terrible at doing what Chris does with options. I've done the, hey, I think a stock might go up because social arb is happening and like whatever, right? And I'll go buy the stock. But when it comes to buying options, I am so bad at it. I've probably lost $15,000, $20,000 over my life trying to figure out these options, and it's so hard between the theta decay, between the premiums, with the underlying VIX now elevated, like all these crazy terms and Greeks, and it's so hard. So shout out to Chris for being able to do it. If you want to like figure it out, like go figure it out with this like $200 a month that you're allocating to this high risk bucket. Encourage everyone to go be curious and do things like that. But of course, always make sure that you're maxing out the Roth IRA, you're investing in your 401k, like you're doing the normal things necessary to afford you the opportunity to go open up a high risk bucket.